So those of you that are in week, what, 3 or something, 3 or 12, either one. Do you guys have any questions? Homework, test, anything?
Hey, Mark, it's Ryan.
Yeah.
Is there a specific channel that you want us to ask questions related to the advanced course as we start that?
Um. Honestly, just make a. I can make a quick channel on Discord real quick.
Okay, that'd be cool because I was just
Yeah.
thinking, you know, I don't know if you wanted us to be asking questions, for everybody or you wanted that. Cool.
Yeah, I got you. Course questions. Um. Let me edit this real quick. Questions, view. Syntax. There. So you should have a. Yeah, if you look, there's a. I just added it, so it's there on Discord. So
I
if you
see
have
it.
any
Thank you.
questions, just ask them there.
Cool. Thanks.
Yep. For those of you in week 12, if you haven't turned in, you need the one thing that's important for you to know is in order to move on, right? You need to turn in. You need to make sure you've turned in all your homework and all your tests and all that stuff, especially the week 12 homework and tests. So I know some of you are working on the homework part um, for week 12 or whatnots, and you've already sent me a message about that. That's completely fine. But as soon as you get both turned in, that's when you receive certificate. When you receive the certificate, that's when you actually move on to the advanced course. Um, so not everybody will, and that's the point. For those of you in week 3, I believe, I think the biggest thing that I want you guys to take from entries and exits is I think the biggest thing that's going to help you get a better entry into any kind of trade setup is making sure to wait for a pullback to get a better entry. Um, you'll notice, you should have noticed a lot of the times when you're waiting for a crossover to happen or a close above or below the 13 EMA, that price action tends to, kind of be out there, and so your risk reward ratio isn't really the best. Well, if you wait for a pullback on the next candle, then you should get a way better entry. Now, the pullbacks obviously don't happen every single time, and that's fine, but over an extended period of time of 1, 2, 3 years, if you back test this, you'll see that more often than not, you'll get a pullback, which will lead you to a better entry, which will essentially lead you to a better risk to reward ratio. So, super important um, that you take that into consideration and just don't jump in to a trade real suddenly because of your emotions of fear of missing out on a trade or whatnot. There'll always be trades, so there's no need to risk something. Um, what else was I going to say about that? Also remember that on entries or on setups that have um, a star pattern, railroad tracks, quarter wood on a second leg, you're not waiting for a crossover, you're not waiting for a close. You can get into those trades as soon as that second leg appears with that particular pattern. We're not talking about first leg patterns. We're only talking about second leg, railroad tracks, star patterns, quarter woods, or that pattern that I showed you guys, that I keep mentioning or showing you, which is the large candle with either the 2 or 3 dojis followed by another large candle like that. If you see that, that's same thing. You don't have to wait. Does all that make sense? All right. Somebody pick a pair. We'll do some quick back testing um, for 1 or 2 weeks or something real quick.
Yo, Mark, I have a quick question.
Yeah.
Last week I got a little confused about that gold situation. I looked at the chart; it was frozen. I'm not sure what that was all about. Apparently, you broke the market, but you know what I mean. I like a little
Why did I
explanation.
break the market?
Huh?
How did I break the market?
Travis said you abused gold to the point where they had to shut it down. You know.
I don't know. I didn't trade gold all of last week. I haven't traded. Um, I haven't traded gold in a while. I've just been trading Bitcoin, Litecoin, Ethereum. So yeah, I mean, did something happen? You said, or were the brokers?
Yeah, it's just that it kind of just got stuck on Friday, and it wasn't moving.
Like this last Friday?
Yeah.
Yeah, I don't know, man. Yeah, I have no idea.
Mark, the way you opened that up just now looks like a big W forming. The second leg of the W just formed, right?
Yeah, yeah.
Oh, wow.
Yeah, so
That would be a good swing trade opportunity right there.
it would be. Yeah, I mean, I think, if you go just higher to the higher time frame, you're looking at just being stuck right now within 1750 and 1682. So a break to the up or to the bottom of that is going to create a huge movement of at least 300 pips or so. Because I mean, if you think about it, you're going up. If you break this here, you're going to these points up here. If you break this down here, then you're literally going down here to this point. So it's pretty big moves either way. Once it breaks all that. So I mean, it's a almost 600 pip move up, or 1,000 pip move down. So it's gonna be pretty interesting to see what happens with that. I think you can already see on the DXY. I mean, it's already doing its thing from having a Democrat already in office. You can already see it's starting to make a big push. It's going to make it all the way up to 94 to these highs here. Question is, what happens when it gets here? Is it going to keep going, or is it going to drop back down? And here it'll match the 800 EMA as well when it gets up to here. But yeah. I mean, I think there's probably going to be, you know, some consolidation happening here. Because, I mean, if you look the last time it was in this channel, it consolidated from April all the way to June before it broke out. So it might be in that channel for some time. But I mean, for right now, your bias is probably a buy because you want to get up to 1750 first, and then you want to see what price happens when it reacts to 1750. But yeah, that's what it is so far. Any other questions on those pairs? All right, so somebody give me a pair.
Euro NZD.
Euro NZD. All right, so let's just 1 hour. So let's do medium animo, catch her out by the toe. Let's go back. I messed that one up. Let's go back like another week. All right, so what kind of a week did we, yeah, let me finish this off. What kind of week was this? What kind of a cycle was it for the previous week there?
Trending?
Trending, right?
Yeah.
So trending cycle on that week there. And let's see, before that, this was 2 weeks, so trending down, trending back up. Alright, so back-to-back trending cycles. Alright, so let's get this out to that session and see. So really nothing so far, just one straight move. You got the EMAs going straight through price also. So that's not the best thing either. So I mean, having the EMAs going straight through price like that, what does that initially kind of give you clues about when you're looking at this?
Accumulation.
Accumulation, right?
Yeah.
So the first kind of almost instinct is, you probably are going to be looking at possibly an accumulation cycle for that week, or basically just moving straight sideways between a high and low. Probably that's, initially, let's say, created off of the Sunday Monday high, or Sunday Monday high and low essentially. So it kind of tends to, kind of keep within that specific range, and so it makes it even more important to kind of pay more attention to the types of patterns that you could potentially trade for this. So it's definitely something to keep in mind when you're looking at this stuff. Now that right there, you had a move straight down, kind of hung around here, and now you went up, try to get up to the middle of the range, basically kind of got rejected there, and you had a railroad track that pinned to the 50. Timing's not the best. Almost made it to the 50 here on the TDI. But what we have to work with so far is essentially the low and the high there. So within that range, this might be a type 3 to sell, but not the best timing. Obviously the target would be the bottom, that line, that white line, if it makes it there, but so just pay attention just again to the behaviors that happen here when you have price movement come down, comes basically to the low, and is now just straight moving sideways. Again, it's kind of hard to trade this stuff because you have the EMAs going straight through price. So unless this is going to go straight through all this stuff and go right back to the high, makes it kind of hard to to formulate a pattern or something to trade. So yeah, so not really the best thing at all on that day. So now you can see EMAs are now above price. Going into what, Tuesday, we're at the low here. Let's see what happens here. All right, so just based off of that price movement, there's literally only one option for you to trade, right? What's the only trade possible?
Type 1.
Type 1, right? So it's the only thing that you want to look for, essentially, on that day or during that session is to see if it creates type 1. Preferably, if it's going up like this, then obviously you would want to catch a type 1 if it can get up to all the way up to that high of yesterday, Sunday, Monday's high, that would make the perfect sense for you to try to get a type 1 setup. Now, the only problem that I see with this that's going to, probably not give us a good entry unless it creates a really good apex to that second leg, is the fact that because of this move is so parabolic like this, it's going to separate the 5 and 13. So you're going to need a lot of sideways movement essentially to get you a good second leg. But you can see that right there is your kind of like move away candle. That's like, we don't want to be up here anymore. So the good thing is that it was pretty big, so now it forces the 5 and 13 to come together. The question is this basically too big of a risk for you to take as a trade? What's the I mean, yeah, that's like 30 something pips. That doesn't make very much sense. The only way this would make sense is if it goes, if you have some kind of I guess sideways movement or something. Yeah. You don't get anything like that. So, I mean, unless you're willing to risk 50 pips or something like that, it doesn't make a lot of sense. Although I do believe that this is right here the high of the day of that session. So probably this is probably going to go down. What does that look like right there? What's missing?
I need another long candle beside it.
Right. Need another what candle?
The large one. The
Large one, right?
Yeah.
Yeah. And let's see, is this all the way down at the bottom? It is. This was already down at the bottom here, so this is all the way down here. This is actually a good type of setup. Now, you know what I'm already thinking is the fact that if you do get a large candle, I mean, it's going to be impossible to enter, right?
Yeah, it's too large, probably.
Because it's too big.
Yeah.
So what happens if you see this, you're like, fuck it, I'll take a small chance on a trade? So like, let's say 13 pips, but I'm saying even a smaller risk than that. So let's say if you trade like a standard 1 lot, that's what you normally trade. I'm saying like lower that to like, let's say a 0.10, right? So you take a lower risk because the stop loss is so low, right? It's 13 pips, but you're also being extra cautious and you're way lowering your lot size as well. So if you do get taken out, it'll literally be the next candle, and your risk is fairly low. But the reward of it is huge, because if that candle comes all the way up to here, I mean, that's a pretty good sized candle. If this matches this, which is like a 43 pip candle. Do you see what I'm saying? So huge reward, little risk. And I mean, if you're wrong, like literally the next candle, it'll just take you out. But I mean, seeing this pattern so many freaking times, like, you know, it makes it like, is it possible for you to, there it is, see that? And in 2 candles, you're done with the trade. If you see this pattern on a second leg, so this would be like a, like that. So that a trade like that would be, I mean, 100. That's like an 8-to-1 risk to reward ratio. If you just spot this pattern on a second leg.
Yeah, that's clean. There's not even a stop hunt with that one.
That's what I'm saying. So if there is a stop hunt, though, you're literally the next candle you're taking out. You know, because typically you only see 2, or I've seen 3 dojis in a row. You know what I mean? And then you get another big candle like that. But I mean, if you see these long enough, you kind of you see them, you're like, holy shit. Are you willing to, you know, if you, again, just bring down the risk on the lot size. Don't freaking put 3 lots on this, you know. You're taking a chance out of the abnormal because of the pattern that you're seeing, because you've seen it over and over and over again. But just because you've seen that same pattern all over again, obviously doesn't mean that you're going to win every single one. There's always risk involved, so why not just lower the risk for you automatically? If there's one thing that you can control, is literally your risk, how much you're risking.
So, just to clarify, because I've been watching the first video of the advanced course, so you had the type 1 obviously London session, and then here you kind of have like the setup for type 1 W. Obviously, I see that. So I just want to clarify that first leg of the W. How far down does that go? Because that first leg kind of looks like it was kind of a type 2. So I'm just kind of wanting to clarify. Does it matter how far the first leg comes down? Because I know you had said don't take this trade unless it forms like a solid W formation. Does my question make sense?
Yeah, so you're if you're talking about trading New York, right? If you're talking about trading New York, there's really only 2 things that I would like to trade in New York, and that's either reversals, or continuations. Those 2 things. So, like in this case here, if price action would have went like this, right? This would have actually been a pretty good example for a continuation trade. You know,
Right.
but obviously price action didn't do that. It just went literally straight down. As far as like whether it's a type 2 or type 1, if you're looking at the New York session specifically, I mean, this is just a reversal off the low of the day.
Got it. Okay.
You know, so in the New York session, you're not generally going to have like type 1s, 2s. It's literally just 2 main trades that I would look for, and that would be either the reversal like this, so you're reversing off the low or the high of the day, or you're continuing the trade off of a continuation trade.
Got it. Okay.
Those 2
Thank
things.
you. Thank you.
All right, so it is Wednesday. So I mean, clearly, you know, we pretty much know we're just moving sideways at this point. So again, when you're into any kind of a accumulation cycle like this, that's just moving sideways. The most important thing is literally the pattern. It has to be a really good pattern for you to take a trade on this, because a lot of times, you know, you're this is kind of like this. You're kind of stuck in the middle here, where you know it's kind of like in the middle of either going up or down. So the pattern has to be really good and really clear with other confirmations for you to make sure to take a trade up or a trade set up on this. Because at any point it could literally go either up or down. There's no real, you know, kind of bias on this unless you go to the higher time frame and you're seeing this level, you know, being created or whatnots. So let's just say if you're thinking that this is a peak low, peak formation low here, and this is like level one, this is building out level one. So if that's the case, then you're obviously the bigger picture is to look for buys, you know. The problem is with levels is you don't know how long this is going to be worked for, is the biggest disadvantage that you have with levels. All right, so Wednesday. All right, so by looking at this picture, what is in your mind the possibilities of possible patterns that you can get out of this?
Well, the first one's already done it. The second one would be, in my opinion, pinning to the low in a couple of pushes and then reversing to go up, if you're not already in the trade to go down.
Mm-hmm.
Also, if they're trapping volume to get people to go short with big, long, engulfing candles at the lower part of the range, not going anywhere, that's also a behavior, with pins to the bottom towards the low of the day. There's a lot of things, but
There's a lot of things, right? So,
oh yeah,
here's what comes up to me in kind of my mindset when I look at this, right? Is I'm looking at a big push down. I'm looking at all of the bigger EMAs, 250, 800, all going above this, above here, right here, right? So I automatically think that, like, for me, the only two options that I would like to get out of this would probably be that for me feel the best setups possible is to either get another leg that comes up to here and goes through the price and then comes down, or to get a type 3 that bounces off of this and goes down. Is what I would want to see. If I see that, I would want to take that trade, right? So those are the two things that, like, for me, automatically I'm just looking at right now based off of just that by itself. So as this plays out, obviously every candle is going to give you more clues, more clues, more clues, more clues. And so look at that. You got a star pattern there right to the 50. The problem is, I think that this candle is way too freaking big. Yeah, it's like freaking 30 pips or whatnots. So I'm already thinking like type 3 is what I'm thinking. You get also a pinch here to the 50 as well on the TDI. So for this to be a trade for me, I would have to have a pullback. This is too big of a candle. The pullback would need to be at least half of that candle, so somewhere in there, to have some kind of decent, entry. And I mean, really, if you're just going to the bottom here, you're getting 40 pips just to go literally right there to the bottom. So it's not a lot that you're asking for it to begin with. So for me, I would need a pullback to get into that as a type 3. As a type 3 pattern. So if you don't get a pullback, then obviously it's way too big, too much of a risk to get into that.
You'll probably get a pullback because it looks like the closing price of that candle against the candle that engulfed, there's a gap, and normally they fill that gap. The small doji and then the big red candle, there's a huge gap, and normally they fill that gap for breakout traders that's taking that short to try to stop them out for break even.
Well, let's see what happens here. Yeah, you get a pullback candle. Yep. You get 2 of them.
Yep, and they got that guy.
Boom.
Yep.
See that? So there you go. And then damn near almost in 2 candles, it almost hit your 40 pips. That should have hit your take profit there. Does that keep going or stop? I mean, look where it's going to. That same low. And push further now. Look at that whole reversal way back. Look at that. All right, so that trade right there would have turned into a 6-to-1 trade.
Mark, can I ask Troy to explain that again with that star candle when he said they would definitely have a pullback because of that gap?
The gap was it here? Where's the gap that you're?
Yeah, right there.
Is it here?
No, Troy. Underneath the doji, yeah.
Yeah. Okay. When people have breakout strategies to go short, a lot of times people will put their order at the low of that doji, at the break of the doji to go short, because they may have went to a smaller time frame to verify structure. Yeah. So when they come back, they like to come back and fill that gap to either stop them out or put heat on those traders who got in at that area, especially when there's a large gap. They do that a lot.
Okay, thanks.
So that's 2 trades. What's this? This Thursday now going into Thursday. All right, so coming out of the middle, looks like, and I mean right away, I just pay attention to where this is here, where this is here, where this is here, because this might be a situation where it literally does this crap here. It bounces off of those EMAs and does absolutely like complete garbage of hot mess of nothing, because it's gonna bounce back and forth, back and forth, back and forth, back and forth. There's that same pattern again right there. This would be I think, probably a bad example of maybe when to take this pattern, because there's just so much mess here. This is a really good pattern actually. This, full candle, 2 dojis, and then a full candle back. But there's so much, like, I want to say, crap. I don't think that would make very much sense. I mean, it's a 20 pip, and they even make it a 2-to-1. You're looking at down here somewhere. I mean, granted, it's not bad, but I don't know. I just don't like. I don't like this. There's no clear. Where's the first versus second leg? Would you call this a first leg and then this is a second leg? So it'd be something like this. Some people might see it like as this is the first leg, that's the second leg. I really don't think so. So it's very unclear. So to me, it makes it a good example of a bad example of that kind of a pattern to take for it. There's another one coming back up. You see that? Again, I don't think this is a good example to take of a trade, because price is just moving straight sideways. There's no first or second leg or anything like that. It's just the pattern itself. So the pattern itself can't replace the first or the any of the legs, let's say, you know what I mean? This is probably literally just going to go sideways the whole time. I think if you took this would be a really, I think, lucky trade to get this. Yeah, this is probably just going to do all sideways. Yeah. So Fridays typically is pretty interesting because, Friday is a lot of the times is typically used for possibly setting up the next week. So you got to have, to make it, a tradable Friday, you got to have a really good pattern to trade to begin with. So hopefully it's something that we can get here. If not, then it's just a day off. First thing is just noticing how price action is behaving when it's at the 800. Look how it's behaving when it gets to the 200. It's like literally acting as a form of support and resistance here. That is just going to go sideways, sideways, sideways. At some point, though, there should be a break of this. Especially if it's carrying over from a previous day, But at the end of the day, you still need to have a pattern to trade. But you can see it's just bouncing, 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 bounce back up now, bounce back down now. There's probably the movement there going down. But again, it's just not a clear picture at all of anything. Now, one thing to take note is, if you look at this here, low of the day, interesting how they're kind of just doing this. I wonder if this will just do this, or does it come back down? If it comes back down and it sets, I don't want to say like I guess a precedent or a movement where they know that this is basically the bottom that they don't want to go to, then that could be a possible reversal trade. Or this could be a half a bat here where it just goes up. I think let's see, still sideways. I think that right there would be your answer. Do you see that? There's your second leg right here on a railroad track. So question is, where do you enter? I mean, ideally, obviously, you would want to have a pullback. If you don't have a pullback, where do you even take this to begin with, to even kind of make it worth your while on this? I mean, you'd have to go at least to the middle of the range, if not to the 800. But to the middle of the range will give you 2 to 1 if you stick to a 20 pip stop loss. If you get a pullback, then I'd probably say you're more likely down here, and then now you're at a 15 pip pullback. That same trade is now a 3 to 1 risk reward ratio. So the pullback in itself gives you a huge advantage whether one hits or the other. You can see you can go from a 3 to 1, from a 2 to 1 to a 3 to 1, just by essentially a pullback. So let's stack these on top of each other real quick and see. So this one's the pullback, this one's the other one. Let's see which one goes. So the pullback one hits it. So if it gets to the middle of the range, it's 3 to 1. So there, it's a 3 to 1 risk reward ratio, instead of a 2 to 1 if you went right after the railroad track. And shit, still, it almost went up to the 800. So in a horrible, disgusting week, you would have had 1, 2, 3 trades, 4 if you count this one, on a just really just horrible, disgusting, ugly looking chart. Questions about that week?
Yeah, what's next week gonna do? Let's do another week.
That's a great question. What's next week going to do? I don't know. All right, so we just had an accumulation cycle that this week here. So let's see what happens this week. All right, so let's play this. Here's that same pattern again. So I would say here you're seeing it kind of creep slowly, but it's still creating a little box here. So the question is, you want it to break, you want a candle that tells you, hey, we're done messing in this little range here. What would be nice would be a box or a candle, a big candle that, you know, takes out all this stuff and gives you the indication of where they're going. Because this would be a nice W, but you still need price action to tell you. Look at that, still sideways, jeez. There you go. Now you know what direction they want to go. So going into the New York session, what is you only get one possible thing here that you could trade, right? It's like a basically a reversal. Question is, I don't think this is maybe a ugly ass looking W there. And it'll probably only go up to here, which is about 32 pips or so. But it'll only be a 1-to-1 risk to reward ratio. So I don't think it'll be worth it. Alright, so Tuesday. We still have the EMAs working working through price. So until it breaks out of that kind of out of that structure, you're still working within, you know, highs and lows of really the previous week, or even just that particular week itself, Sunday, Monday, because it's not like perfectly in line with the previous week's highs and lows. It's just literally on its own thing right now. So you really can't use that to really to your advantage at all. Another thing is this is probably going to have price action moving out of the middle, so, and this is a pretty big, it's 103 pip range, so. Yeah, you can see it's just moving sideways. Can it get to the bottom of this range to give you something? There it is. So that's one. Oh, what does it do? That's the second one right there. See how far deep, how deeper this pin was, which is where this one was. See how the rest of them are all the way up here? And this one comes down deep. That's the one that wants to get people trapped in there. You still need, I mean, this is still like way like freaking 20 pips out. That's probably the one here. Yep. See, there was a pattern here, but it's not real. All these freaking candles have no meat to them. It's just all stick and bones. You know? So unless you know this stuff of like this is the first leg, that's the second leg, your entry's here, and then you take that up, like it's not gonna give you a good this wouldn't be a good trade. I mean, you're at, again, a 1-to-1 risk to reward ratio. You would need this to go all the way up to this line here, yeah. And that's very unlikely that you'd get that kind of move. That's a pretty big Asian range. The 151 pip Asian range. If it gets to the middle of the range, that'd be a good type 3 setup. Guess doesn't want to do that. All right, I like this as a possible continuation trade. It's cleared above all of the 800, 200 EMAs. It's way too, yeah, it's like freaking 70 pips above what is now supposedly the high of the day. So you're not gonna get, you know, let's say a type 1M to sell. I think the better trade here is a continuation trade to go higher. Question becomes, when you get into the trade, I mean, you can get into it as a railroad track. I mean, you could wait for another candle to see if it creates a second leg. I mean, there's a bunch of different things that come into play here, but for me, this definitely would be the trade setup that I'd be looking for. Probably right there is when I'd get in. This move down, that would be the because that'd be the ideal setup, because the risk that you're taking is super low. The risk that you're taking here is super low. So on a spike down like this, once that candle closes, I mean, your risk is like nothing. It's literally nothing. Now, like, take a look at this. This is like way too big, right? 34 pips doesn't make any sense. You would need, you need a pullback. There's no way around it. The candle's too big. So you need a pullback to make this worth it. Because, I mean, you're at least trying to go to here, if not up here. So to go here, it's almost a 3-to-1, but you need a pullback. So depending on whether or not you get a pullback depends whether or not, you know, it's a trade that you're going to trade, basically. There's one pullback right there. So now 18 pips, 21 pips, you're still at 2.5 to 1 risk to reward ratio. Not too shabby, not too bad. That's a better entry there. And let's see, does it go or does it not? It does. So it goes literally to the very top. So if you're aiming to these, to the top here, to the high, that's about 47 pips or so. So it would have been 2.3 to 1 risk to reward ratio. If you got in on this other pullback here, then that makes it a whole lot better. Now it's a 3-to-1. So all this stuff plays, I think, a huge part. So what is this, Thursday? Be looking for a type 1 here to go back up. I think the problem that you might run into is the fact that this too big of a stop loss, and then you got these two. That's probably going to stop you. The ideal setup would be if this could come back and give you a multi-session leg. That would be way better than that. That might be a good entry there. How many pips is that? It's 23 pips. Where would you take that to? Anybody? Where would you take that to?
I wouldn't take that trade for me.
You wouldn't take that trade? What's the thing that's stopping you from taking that trade?
Honestly, I would have taken that right between New York and London. You see that star pattern?
Yeah.
If you can hover over it.
Yeah, this right here.
Yep. Okay. That pin, if you go all the way to the left, is going. Yep, right there. Nope. Yeah, keep going. That big candle, that red candle, right. There we go, right there. That pin is pushing up to go after people at break even for people that's taking it low. So from that point, I know it's going down. And it's going to hit the stops at the bottom. That's the trade I would have took just for a quick. Then after that, as far as the reversal, I wouldn't be interested in that.
Gotcha. Yeah, I think this right here would kind of ward me off. Looks really good though, especially if you're in a. Looks like might be a trending cycle, but. If you take it, you have to take it like. Have to go up here though. It's the problem. To get a 2-to-1, you'd be like all the way back up here. I don't know. Does it even go there? And you can see it doesn't. That's 1, 2, 3, 4, 5, 6 candles in, break even, small loss, whatever. Get out of the trade, and that's it for that. I think that as long as this if this is going to be a what you call it, a trending cycle, it needs to have a movement up that doesn't go below this box here, because then it would be more of a really ugly accumulation cycle, because you still have the EMAs going through price. This just happened right outside of the box. And that's it. You're not going to have anything else. Yeah, so on that week, you only had what, one trade here, two if you would have taken that as a, so 1 win, 1 loss on that week. So, all right, any questions?
No, I don't have any.
No. Was this helpful at all?
Yeah, it was.
All right, cool. Well, if you guys don't have any questions, then I'll let you guys go, and we'll see you guys on Tuesday.
Okay, thank you, Mark.
You're welcome. Have a good one.
Thanks. Bye.
Thanks, Mark.
Yep.